Lewis Alexander, U.S. Chief Economist at Nomura Securities, joins us on the phone line from New York this late on Sunday evening. So thank you so much for that, Lewis. And Peter McGuire, Chief Executive Officer at XM.com, joins in from Sydney. Gentlemen, both of you, good morning to you, or good evening to you. Lewis, let's start off with you first. Not really a comment on whether this is right or wrong or thereabouts, but we're just trying to gauge the impact of both of these, one move and one potential move, and the sentiment that it would have, sentiment impact that it has on the markets. What's your sense?
So, look, the shutdown itself, first of all, it only affects about a third of the federal government. Frankly, shutdowns are usually a temporary disruption. They don't have long-run economic effects. So at one level, the direct effects aren't that big. But I think it just highlights the dysfunctional nature of policymaking in Washington, particularly the way it's going to be next year. And so people who had hoped for some sort of fiscal stimulus that was continue to generate strong U.S. growth, I think this is a sign that isn't going to happen. And just this is a sign in general that policymaking in Washington isn't working very well. And that's not good. I would say that I think most of this is in the market already. I think it became clear Friday afternoon that we were going to be in for a long shutdown, and that's why the markets ended so badly last week.
It's evident that the U.S. markets are in the eye of the storm, Lewis. The chatter around likely ouster of Jerome Powell was also creating a bit of a flutter, though I gather from the series of tweets that Mnuchin has put out that is not going to be the case. Would the markets be convinced, or would the markets be on tenterhooks?
So look, I think if there were, any sort of attempt to try and put pressure on Powell, I think that would be a problem. I think that would be seen as negative for governance generally in the U.S. and not good for markets. Look, I think that what you heard from Secretary Mnuchin over the weekend is I think they're very aware of that fact. They're frankly very aware of the legal constraints. There really isn't a way to do it. And so I think they realize that's going to be counterproductive. Now, President Trump is somebody who expresses his mind, and I expect we're going to get further criticisms of the Fed coming from him. But I think as long as they make it clear that this is just him expressing his opinion, I don't think it has a huge impact.
What's your sense, Lewis, on what happens to the U.S. markets in the near term? It's been a terrible month of December. Does the holiday week of sorts see more of the same, or do you reckon that there could be a bounce, whether a dead cat bounce or otherwise? I mean, not trying to get a prediction from you, more a sense of what Nomura as a house believes.
So look, I just say a couple things. First of all, there's an awful lot of bad news built into the markets already. I don't think there's a lot. We're not going to get a lot of news over the next week. At least I'm not expecting it, that could sort of push things further. Frankly, it does feel to me like the negativity in financial markets has gone beyond certainly where I think the economy is. I think the economy is going to slow, but I don't think it's as weak as markets would imply. So if we can get a little bit of a break from the kind of the news front, I think there's a chance that things might stabilize here. But that depends on there sort of being no more surprises. And of course, we can never be sure about that.
Right, with Donald Trump in the seat as well. Well, Peter McGuire also with us. Peter, you just heard Lewis Alexander speak about his thoughts on, and from the hot seat in Washington. What's your sense of what all of this to emerging markets and the Asian markets? Because as we see, there's a bit of a calm in the 2 or 3 markets that are running today.
Well, Niraj, I think first off, there will be a little bit of calm. Let's see how the day eventuates out of the US and what happens later on as far as Europe opening and, of course, what happens in the US tonight. The sense of uneasiness is one of, it's put traders on the back foot, certainly creating a terrible, I think, sense of, how the year has ended and how it's played out, certainly in the US, and look at the China market as well. And that's creating, I think, that fear side. If you roll it across as far as crude, the market is just behaving, how would you say it? I suppose irrationally in a lot of ways, considering where it was in, that September, October early period. And it seems to be just one-way traffic for all of the markets since then. Where it ends, I mean, it's just a wait and see. Although I wouldn't be surprised if you're going to, knowing I think observing President Trump over the last 2 years and his behaviour before that, if you're going to come out with bad news, come out when holidays are on, and I wouldn't be surprised if he turns the Twitter beat up over the next 24 hours. So, hold on to your hat. It's going to be a rough ride, and I can't see it, the Dow really appreciating much from this sort of number over the next matter of days.
Peter, if one thing is how much it appreciates, the other bit is, and I think as Lewis said that, even if there is a bit of a calm, let's assume the Dow doesn't appreciate too much, but if it stops correcting, the impact that it has on other markets. I mean, India is separate because India has been at complete dichotomy with what the US markets are doing. We've done really well compared to the US markets, but the other Asian markets have come off a bit. If the Dow and the S&P stop falling for the next couple of weeks, how would the other emerging markets take it, or decoupled, you would reckon?
Well, you've got also, that's nice if they do, but remembering on the 14th of Jan, you've got the Brexit issue. Then you've got rolling forward naturally that the momentum coming into France. You've got all of the uneasiness across that Eurozone. So there's no sense of calm there to really, as a backstop. And the next part is, how bad is, if there is any potential shutdown, and what effect is that going to have psychologically to the market? Yields, Fed's efficiency or effectiveness leading into 19, that's now under question to some extent as far as, certainly from the President's mantra. And are there going to be any more casualties after James Mattis has resigned? The likes of Larry Kudlow, the likes of Navarro, these sort of guys, are they going to be still, prepared to sit at the same table as the President? Okay.
Well, let's wait and watch. Maybe the markets have run ahead of where the economy is, and the economic scenario is not as bad. So let's see if the markets recover a bit, or do they continue to be volatile? We'll get to know about it. Lewis Alexander and Peter McGuire, gentlemen, season's greetings to you, and thank you so much for joining in this early morning in India time.